Hey everyone, one of the best way I try to identify promising business is by keeping a close eye on the shareholding pattern of the company. My thesis is, in majority of cases, if public holding is consistently reducing and institutional holding including FIs and DIs is increasing, there's something interesting about the company. While there can be some exceptions, this thesis has worked out very well in the past. And in today's video, I want to discuss one such high growth small cap company where public holding has consistently reduced in last 5 quarters from 44.67% to 31.2%, and FII holding is consistently up in the same time period from 2% to 11.3%. Now this is especially very interesting because DIs are anyways the net buyer in India because of massive inflow via SIP. But FIs are the net seller in the Indian market for a very long period. So FI's increasing stake in the Indian company, especially in this time period, is worth paying more attention. And DIs have also consistently increased stake from 7.7 to 14.1%. Although in the latest September quarter, DI holding has slightly reduced, but the stakes are purchased by FII. Public holding continued to reduce. Interestingly, company's profit in trailing 12 months has jumped by 88%. Company's market cap today is around 11,000 crore. Well, I'm talking about Shaily Engineering Plastic. What has really intrigued me is company's share price has jumped a lot in last 1 year, and it commands a very rich valuation with a PE of more than 90. Yet FIs and DIs are consistently increasing stake in company in every single quarter, including the latest bulk deal in October month that included buyers like 361 High Growth Companies Fund, Societal Journal, Abu Dhabi Investment Authority, BofA Security, and even Stallion Asset, that is a very high growth PMS fund. So that was the key trigger for me to deep dive into the business and understand what is so special about the company. What are the key growth drivers? But just like any business, Shaily Engineering also has certain risks that I try to identify. And that's what we are going to discuss in this video. But as usual, do not consider it as a buy-sell call. The idea here is to discuss potential opportunities, but ultimately, you need to do your own research to build conviction before investing. Otherwise, even a 10% fall can create panic. Another very important part of investing is close tracking of business performance every quarter. That includes reading the investor presentation as well as con call. Of course, it is not easy for a retail investor with a job or business to spend so much time and effort in tracking every business. That's where I try to add value with my exclusive weekly video series where I closely track more than 200 quarterly results and keep a close eye on latest trends and development to identify investment opportunity. The goal is to empower you with the right knowledge so that you can build conviction before investing your money rather than blindly investing based on tips. For more details, you can explore my website or join button of this YouTube channel. There's some additional discount if you enroll from the website, but that is only for a limited slot. Promo code I have provided in the pinned comment. Alright, let's get started. Established in 1987, Shaily Engineering is a precision plastic engineering company with 75% business coming from outside India. Company has 3 business verticals. First is consumer, where company manufacture plastic products for kitchen, cooking, storage, cleaning. Then it manufacture products for beauty and personal care. Then second vertical is industrial, that include high performance plastic for traditional lighting or the latest LED products. Then electrical household appliances and various automotive components. Its client list include very reputed companies in the industry. Then its third vertical is healthcare, that include platform devices, pharma devices and pharma packaging that again include many reputed clients. Now on the first look, I felt Shaily Engineering has a very low margin commoditized business without any strong moat. So then I checked company's margin profile. Although the data is available only from 2022, but very interesting trend is company's margins are expanding year on year from 15% to 24%. So company's margins do not suggest that Shaily has a commoditized business. In fact, it suggests that company is consistently moving towards high margin business. Also, if you look at the growth, its revenue and profit growth between 22 to 24 was not great. But suddenly in 2024, revenue jumped by 22% and profit shot up by 63%. And last quarter, that is Q1 FY26, growth was simply explosive with revenue growing 33%, gross profit jumped by 1140 basis point, EBITDA margin up by 1140 basis point, and net profit up by 268%. That clearly suggests that there is some very interesting tailwind in the business. And when I deep dive further, I found that in Q1 FY26, company's healthcare revenue has jumped by 181% year on year. Consumer growth is 14%, industrial growth has degrown, and overall that resulted in 38% revenue growth. Not only that, company's return ratio like ROC and ROE also jumped significantly. Inventory turnover got increased and debt to equity got reduced. So the financials really intrigued me to deep dive further, and when I looked at company's latest annual report, its chairman mentioned that at Shaily Engineering, we stand at the cusp of multi-year growth journey. Now this growth is basically coming from the healthcare vertical. But what is so special about it? Let's understand it in the next segment. Since the early 2000s, Shaily has been involved in contract manufacturing of insulin pens for Sanofi and Wockhardt. Please note that it is the only Indian manufacturer of insulin pens for Sanofi, and company has created the world's first insulin pen of 100% plastic. But over the last 4-5 years, management has deliberately invested in medical grade capabilities and R&D for drug delivery system that include pen injectors, auto injectors. This was an intentional pivot from low margin consumer plastic to high value healthcare components. Recently, company has created 8 patented platforms for their injectors in collaboration with UK's industrial design consultancy, primarily catering to GLP-1 blockbuster drugs. And this is the biggest growth driver for the company. Now, some of you might not be aware about GLP-1. So we need to spend a few minutes to understand what exactly is GLP-1 and what is Shaily Engineering role in this. So GLP-1 stands for glucagon-like peptide 1. It's a hormone produced naturally in our gut that helps control blood sugar and appetite. Scientists have figured out that by mimicking this hormone, you can help diabetic and overweight patients manage insulin better and lose weight. And that discovery changed everything. Today, drugs like Ozempic and Wegovy by Novo Nordisk or Mounjaro by Eli Lilly are literally helping people lose up to 15 to 20% of their body weight, something no pill or diet has ever achieved at scale. And the world is going crazy about them. Celebrities are using them and analysts are calling this the next $1 trillion healthcare revolution. Global demand is so strong that both Novo Nordisk and Eli Lilly are struggling to keep up with the demand. Today, every major pharma company is racing to launch its own version of GLP-1 drug. Estimate says that the GLP-1 market could reach $100 to $150 billion by 2030. That's bigger than the entire insulin market today. So where does Shaily Engineering fit into this? Basically, these GLP-1 drugs are not tablets or capsule. They are injectables taken once a week using specialized self-injecting pens. And that's exactly where Shaily Engineering comes in. Shaily has spent years mastering precision plastic molding, and over the past few years, it has quietly built world-class facility to make drug delivery devices like pen injector, auto injector, and medical components. So Shaily does not make the drug. It makes the pen that delivers the drug. Company's management has informed that immediate development in healthcare vertical include installation of 19 injection molding machines that are expected to complete by Q2 FY26. That is in current quarter. This would increase the capacity by 25 million pen per annum. Company has officially started the commercial manufacturing of GLP-1 of pens for semaglutide. In addition to the above mentioned capacity expansion, management is also planning an additional line of 25 million pens for one of the other variant of semaglutide pen. Company plan to invest a total capex of 125 crore in the same FY26 year. This expansion is expected to be completed between end of FY26 and beginning of FY27. So, after completion of additional line of 25 million pen in Q2 FY26, company would have a capacity of 45 million pen. And then there is additional 25 million pen capacity planned for FY27. That would take the total capacity to 70 to 75 million pen by end of FY27. Please note that IP-led pens have significantly higher margin than contract manufacturing pen. And the revenue split between own IP pen and contract manufacturing for the company is expected to shift from current level of 30-70 to 80-20 in the next few years. That can really boost company's margin big time. And within IP pen, today the demand for GLP-1 versus non-GLP is around 60-40. As far as financial projections are concerned, management has not provided any specific guidance in terms of percentage growth in revenue and net profit. But they have clearly mentioned that their healthcare vertical is at an inflection point with significant growth due to GLP-1 demand. Now let us discuss the key risk in the growth thesis. So first key risk is concentration risk. Shaily's healthcare division is tied to a few large global clients catering to GLP-1 demand. But when your growth is tied to one mega theme or a few customers, your destiny depends on that theme staying hot. At the moment, GLP-1 drugs are witnessing explosive demand. But the question is, how long can this demand sustain? What about the side effect or long-term effects? Plus, there is also a potential for oral formulation that can reduce injector demand. Although at the moment GLP-1 demand is massive, but there is always a risk of over-dependence on a single mega theme that needs to be tracked very closely. Then second risk is execution risk. Shaily has announced big capacity addition from 25 million pen to 70 to 90 million pen annually. But manufacturing precision medical devices for global pharma giants is not a small feat. It requires zero defect quality, regulatory approval, and on-time delivery across batches. Even a small delay or quality issue can push commercial timelines. Or what if the company does not receive orders as per expectation? That can result in low utilization rate, impacting margins and growth. Then third risk is competition risk. At the moment, Shaily Engineering has certainly got the head start in GLP-1 pen manufacturing. Also, it's not a cakewalk to manufacture such pen, as it is a precision manufacturing segment with zero defect. The regulatory approvals are also very strict. Plus, Shaily has got 8 patented platforms for their injectors. Also, it looks like Shaily has a cost advantage over global competitors. That said, in a competitive market, if there's a massive opportunity like in GLP-1 manufacturing today, I'm sure there will be new competitors that can always create competition for Shaily. And then the fourth risk, in my opinion, is valuation risk. I think it is one of the key risks at the moment. Due to the massive growth opportunity, market is already paying a high premium to the company at a PE of more than 90. Basically, Shaily valuations are already priced to perfection. But here we need to understand one thing. A high PE is not always bad. For instance, Shaily has been commanding more than 90 PE since December 24. Yet the stock has almost doubled from there. So in my opinion, if Shaily can grow its earning at let's say 30-40%, it can sustain such high valuation. If the earning growth is higher than 30-40%, which it has been able to do it in trailing 12 months, the stock price can further increase. But if the growth is not as per market expectation, it can result in valuation derating. Although I expect that considering the demand and capacity ramp up, Shaily should grow at a very high rate for the next few quarters. So just to sum it up, Shaily Engineering is no longer just a plastic company. It's transforming into a high-value healthcare play, riding one of the biggest global healthcare megatrend, that is the GLP-1 revolution. It has global clients, patented platform, cost advantage, and a clear visibility of growth through capacity expansion. Company's margin profile, return ratio, and financial trend all point towards a strong growth ahead. But remember, the stock is already priced for perfection with a PE above 90. So while the growth story is compelling, the valuation risk is equally real. In short, Shaily today stands at an inflection point. If the company executes well, it could result in a massive growth and wealth creation for shareholder. An institution consistently increasing stake in the company even at current valuation suggests that they are expecting very high growth in coming quarter. In that case, in spite of high valuation, there can be more growth ahead in the share price in the coming quarter. Now you tell me in the comment, what do you think about this GLP-1 trend? And can Shaily really benefit from this trend? If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.